Usually when we look at a financial market, there's this expectation of just um, absolute visibility.
Right, like an X-ray.
Exactly. You open up a trading app, you look at a stock or, maybe a token, and you see the exact price, the red and green candles, the whole order book.
The data just points right at the screen and says, well, there it is. That is the market.
Yeah, we really like things to be visible and, liquid, constantly updating. But then you step into the world of digital identity, specifically this new frontier of on-chain naming, and suddenly that X-ray machine is completely broken.
Oh, totally broken. You're looking at a landscape that operates, well, mostly in the shadows.
Right, it's fueled by private deals and just long-term patience. So welcome to today's deep dive. Looking through the stack of articles and market research you provided us today, our mission is to explore a fascinating new frontier of digital real estate that sits halfway between crypto speculation, digital identity, meme culture, and wallet infrastructure. We are exploring the emerging architecture of Solana domain trading and why it is poised to become its own highly specialized niche market. Brought to you by Negotiate.name, the simple way to bid on a curated collection of over 3,000 Solana domains without locking up your Solana. Browse premium.sol names, make unlimited offers, and see what you can negotiate before anyone else does. Okay, let's unpack this, because a Solana domain manages to be a collectible, a username, and a wallet label all at the exact same time. So how does a single asset even function when it's wearing that many hats?
I mean, it really requires a complete paradigm shift from the people interacting with it.
Especially compared to regular crypto trading.
Exactly.
Yeah.
Because right now, the current culture thinks entirely in terms of tokens
Yeah, traders are just looking at liquidity and trading volume.
and market caps, plus those constantly updating floor prices. The whole psychology driving that behavior relies heavily on momentum, fear, and greed.
Right, which really makes me wonder why anyone would choose to hold a highly illiquid asset in a culture that is, absolutely obsessed with liquidity.
Yeah, it really seems counterintuitive.
It does. I mean, if the whole game is moving fast, locking your capital into a domain name just seems like a bad move.
Well, that is the exact dividing line between an ordinary token trader and a domain specialist. A domain just does not trade like a meme coin.
Right, there's no liquid chart with thousands of buyers waiting to click buy at any given second.
No, not at all. It might sit quietly in a wallet for 8 months, and then seemingly out of nowhere, one serious buyer appears who needs that exact name.
Wow. It's like the difference between day trading volatile penny stocks versus dealing in a high-end, bespoke real estate.
That is a perfect analogy.
Because one is entirely about momentum. You're jumping in and out of the penny stock, trying to catch a brief wave of liquidity.
Right. But the bespoke real estate, the domain, is all about patience. You aren't flipping a multi-million-dollar commercial property in a Tuesday afternoon trading section.
Exactly. You are waiting for that one specific, serious buyer to walk through the door who understand exactly why that property is structurally necessary for their business.
In token trading, the ultimate goal is timing, finding the perfect entry point and just exiting before the crowd rushes the door.
But in domain trading,
It's taste and quality.
mhm,
You aren't trading against a swarm of algorithmic trading bots. You are waiting for a human being or business who specifically needs what you hold.
But wait, I'm looking at this and thinking a crypto wallet is, well, fundamentally just a random string of alphanumeric characters on a decentralized database.
Right, 44 characters usually.
Yeah, so why would anyone pay actual, sometimes significant money just to slap a readable sticker on it?
What's fascinating here is that we aren't just talking about a sticker. We are talking about the functional anatomy of digital identity.
Okay, how so?
Well, a standard token is usually valued based on a narrative about utility or community speculation or, some promised future cash flow.
Hmm.
But an identity asset, a domain, is valuable purely because someone wants to be known by it.
So it's about recognition.
Exactly. Think about what a wallet actually represents in a mature digital economy. It's a trader's public reputation.
Or a creator's treasury.
Right. Or a business's storefront.
Yeah.
It's the underlying architecture for an app's smart contract.
But how does it actually work under the hood? Because we talk about names, but the blockchain really only reads code.
Right. It doesn't inherently understand the word Alex.
Yeah, so if I type in a domain name, how does the network know where my money is actually going?
Think of your phone's contact book.
Okay, yeah. I don't memorize my best friend's 10-digit phone number.
Exactly. You just open your phone, tap their name, and the software in the background translates that name into the numeric routing code that connects the call.
Oh, so that is the exact mechanism at play here.
Yes, a domain acts as a decentralized directory. It translates a human-readable word into that terrifying string of random characters so the blockchain knows precisely where to route the funds or the data.
Which makes total sense from a consumer perspective. I mean, if you are a business operating on Solana, you cannot hand your customers a random character address and expect them to feel safe sending you money.
Oh, absolutely not. One typo and the funds are gone forever. You want a name that feels official. You want a name that builds trust instantly.
And because human identity varies so widely, treating all these domains as one giant, undifferentiated pile of names is just a total rookie mistake.
It really is. The market is naturally fracturing into distinct categories.
Which is how true niche markets mature, right? At first, it's just a pile of assets, but once categories form, specialized expertise becomes critical.
Absolutely.
Let's look at the obvious categories first, like first names.
Yeah, that is deeply personal.
A clean first name, like Alex, Mike, Sarah, it feels official and rare. If you want the clean version of yourself on chain, you want your exact first name.
Right, and then you have short names, 3 to 4 letters, maybe 3 digits.
I always compare these to vanity license plates.
Oh, for sure.
They are the visible status layer of the market. The scarcity is visually obvious to anyone who looks at it.
Yeah, you see a 3-letter domain, and you instantly know there simply aren't many of those in existence.
It requires absolutely no explanation to prove its premium nature.
If we connect this to the bigger picture, those personal and status-driven categories are really just the entry point.
So what's the next level?
The real depth of this market emerges when you look at the functional and future-facing categories. Take payment names, for example.
You mean words tied to sending, tipping, or invoicing?
Exactly. Checking out or escrow. Things like donate.sol or pay.sol. These are highly practical.
Right. A buyer immediately understands the business use case. It tells you exactly what the wallet does.
But then we arrive at a much more speculative, yet incredibly compelling niche, AI agent names.
Wait, let's pause on that. You're saying humans will need to know who or what they are dealing with, even if it's, a piece of automated code?
Yes. In the near future, the entity interacting with the domain might not be a human at all.
Okay, so let's say I have a personal AI assistant on my phone, and I tell it to book me a flight and buy me a coffee. My AI needs a wallet to hold funds, right?
Correct.
And it needs to transact with the airline's AI and the coffee shop's AI.
Exactly. And those automated agents require recognized on-chain identities to establish trust. Nobody wants to grant permissions or send funds to an anonymous, random wallet address when dealing with automated software.
So the buyer for an AI domain might be a developer, a startup, or an automation platform looking to establish a trusted identity for their specific bots.
Precisely. And we can't ignore the categories that are entirely native to Solana's specific culture.
Right, like meme names and trading names, ones like Alpha, Sniper, or lasting cultural inside jokes.
Because Solana is a heavily trader-oriented ecosystem. A trading name can become a product, a dashboard, or a signal group's public identity.
But knowing which of those names matters requires an almost obsessive level of cultural awareness. A trader has to know the difference between a temporary 24-hour internet joke and a durable cultural asset that will actually hold value for years.
Which is why the specialists will dominate this space. Each of these categories, first names, payment names, AI agents, meme names, attracts completely different buyers.
And they operate on entirely different price logic, don't they?
Oh, totally. A serious corporate buyer acquiring a payment handle does not evaluate risk or hold periods the same way a crypto-native trader evaluates a meme name.
Here's where it gets really interesting for me, though. Knowing these categories is great theory, but actually buying and selling these things in the wild is a totally different beast.
It's the Wild West right now.
Yeah, if you spend any time in the standard NFT space, you worship at the altar of the floor price. The cheapest available item tells you the baseline value.
Right, but from what the data shows, floor prices in domain trading are actually kind of meaningless.
Yeah, if the cheapest listed name in a giant collection tells me absolutely nothing about what a premium one-word domain is worth, how does anyone know they aren't just getting completely ripped off?
That is where price history and comparable sales become the absolute lifeblood of the market.
Like running comps in real estate.
Exactly.
Yeah.
Traders have to meticulously track what similar names in a specific category sold for to justify their valuations.
But the actual mechanical bottleneck in this entire ecosystem right now isn't a lack of supply or lack of demand, is it?
No, it's discovery.
Discovery, meaning Just the technical hurdle of finding the domain you want.
Right. Unlike a traditional real estate database where every house for sale is listed on a global public server, crypto doesn't always have a central directory of intent.
So there might be an incredible, highly sought after domain just sitting in a dormant wallet somewhere.
Exactly. But buyers don't know who owns that wallet. They don't know if the owner is even willing to sell. And they have no easy, standardized way to submit a formal offer.
The market infrastructure is incredibly inefficient.
Highly inefficient.
But inefficiency is a trader's dream. That friction creates massive opportunities.
Oh, absolutely. If you are the person who understands the block explorers, who can dig through the blockchain, find that hidden, underpriced name, and acquire it before the wider market even realizes it exists, you have a massive informational edge.
And that edge plays out in how the biggest deals are struck, doesn't it? Because the top-tier premium inventory, the absolute best names, rarely hit a public marketplace.
Almost never. They don't sit on a public floor waiting for a random click. They trade privately.
Through direct messages and private brokers.
Yeah, and curated behind-the-scenes networks.
So the transaction is fundamentally a conversation. It's not just connecting a wallet and clicking a buy now button.
Negotiation is a structural requirement of the market. A buyer makes an offer. A seller responds.
The buyer might try to downplay their interest, while the seller evaluates the future commercial value of the name.
Exactly. Sometimes a low offer is simply a probing tactic designed to start a dialogue and force the seller to reveal their expectations.
Negotiation is what actually creates price discovery in a low liquidity environment. The traders who extract the most value here won't just be good at spotting trends. They have to be skilled deal makers who understand buyer psychology.
Right.
So what does this all mean when we zoom out and look at where this is happening?
Context is everything.
Right, because all of these market mechanics, the discovery bottlenecks, the private DMs, the negotiations, they don't exist in a vacuum. They are operating inside Solana.
And you can't separate the asset from the blockchain it lives on.
Solana's DNA is entirely unique. It's incredibly fast, it has incredibly low transaction fees, it's heavily driven by retail users, it's highly experimental, and it is entirely fueled by an economy of attention.
Yeah, a domain that makes perfect sense and holds massive value inside Solana's hyper-fast culture might look completely bizarre to a traditional Web 2 domain investor.
Or even to a veteran Ethereum domain trader.
Exactly. The cultural context dictates the value. You cannot take generic domain investing rules from the 1990s .com boom, paste them onto Solana, and expect to win.
A specialist has to master both the classic tenets of domain quality, like character length, scarcity, and readability, while also fluently speaking the hyper-specific cultural nuances of the Solana ecosystem.
This raises an important question, though.
What's that?
Well, we've explored the mechanics and the theory, but we have to look objectively at the ultimate viability of this market. Based on the sources, we must impartially weigh both the bull case and the bear case.
Let's start with the bull case. The optimistic outlook relies on compounded structural growth, right?
Yes. It assumes Solana continues to expand its daily active user base. It assumes wallet interfaces become more mainstream, hiding the complex cryptography from the average user.
In that scenario, readable names entirely replace those ugly alphanumeric wallet addresses across the whole network.
Exactly. Allow to proliferate and fundamentally require recognized identities to interact with humans and other software.
And brick-and-mortar businesses adopt on-chain payments and need professional, recognizable handles to print on receipts or display on screens.
If all of that happens, the demand for premium Solana domains skyrockets.
It becomes a rich, highly specialized aftermarket driven by taste, cultural awareness, and absolute scarcity. It functions as the foundational property layer of digital identity.
It becomes the digital equivalent of prime commercial real estate in a booming, newly built city. You want the plot of land right in the center of downtown.
But we have to look at the other side of the coin. The bear case is a very real threat to this entire thesis.
Right. The bear case acknowledges the risk of technological bypass and cultural apathy. It's highly possible that mainstream users simply won't care about owning their own decentralized on-chain identity.
The friction of managing it might outweigh the perceived benefit.
Exactly. And perhaps even more dangerously, what happens if the major wallet apps and platforms just decide to use their own internal centralized username systems?
Like if a massive wallet provider simply says, hey, just use our internal tagging system to send money to your friends. Don't worry about buying a decentralized domain.
That walled garden approach would completely bypass the need for this specialized market.
In that bear case scenario, the broader market ignores the asset class entirely.
Bad, low-quality inventory floods the ecosystem, obscuring the truly premium names.
Liquidity dries up completely because the friction of discovery and negotiation remains too high for the average user to bother with.
Sellers refuse to lower prices, buyers refuse to engage, and the famously fast-moving Solana culture simply abandons the narrative and moves on to the next shiny technological trend.
A niche market is never guaranteed to survive just because it's interesting.
It's a really precarious balance. On one hand, you have the undeniable logical need for human-readable identity in a system that is fundamentally hostile to human memory. Nobody's remembering 44 random characters.
On the other hand, you have the severe risk of technological bypass and a user base that might just prefer centralized convenience,
Which brings us back to why the successful participants here will be hyper-specialized. They will be the individuals who deeply understand that risk profile.
who have the capital patience to hold through the quiet, illiquid periods.
Right, and who have the refined taste to identify the specific names that transcend temporary hype. They're analyzing human behavior and technological adoption, not just reading charts.
We've covered a tremendous amount of ground today. We've dismantled the preconceived notion that all crypto trading is just about timing token pumps.
We've explored how a domain functions fundamentally as an identity asset, translating complex routing codes into readable trust.
We've seen how the market is fracturing into specialized categories like payment handles and AI agents.
And how the real financial action happens in quiet, private negotiations rather than on highly visible public floors.
This space sits perfectly right in the crosshairs between frantic crypto culture and traditional patient deal-making. But I want to leave you with a final thought to mull over. Think about the X-ray we talked about at the very beginning of this deep dive. We like visibility. We like knowing exactly where things stand on a public chart. But the future architecture of digital identity is being built in the spaces you can't easily see. Think about the digital footprint you, or your future automated AI assistants, will need to leave in the next decade. Every transaction you make, every travel booking your software executes, every digital interaction your business has. If identity truly is becoming the most valuable foundational property in the digital economy, is it possible that a highly specialized trader out there, deep in a private Discord channel or a direct message, is already negotiating for the exact name you are going to need tomorrow? Thanks for joining us on this deep dive. We'll see you next time.